Hello everyone, welcome back to another accounting video. Today we will be reviewing some common questions via a quiz. You may want to participate together as we go through some of the common questions. Alright, first question here. What are assets? Okay, or basically the definition of assets include resources owned or controlled by a business to carry out business activities. Yes, that's correct, and they are expected to provide future benefits to the business. That's right, in the form of maybe cash or profit. Okay, for the next two options, amount owed, not correct, and amount contributed, also not right. Next question, what are liabilities? Liabilities include items or obligations that are owed by a business to other parties. And the next option here, amount owed by business to the owner, is not correct. In fact, that forms part of equity, okay, the amount owed by business to the owner. And the next one, the amount contributed by the owner and profit generated by the business. All right, so these are the options that we have to select for the respective um, terms related to assets, liabilities, and equity. Okay, following that, let's look at some of the common formulas that we use for equity. Okay, so the most obvious one that we would normally associate with equity would be total assets minus total liabilities. Okay, so let me try to circle this or color this bubble here. All right, so this is the common definition of equity, right? The difference between assets and liabilities. Okay, however, there's another formula that we can use, which is to look at the expanded accounting equation. So, for the first item that I was mentioning, where you have equity equals to total asset minus total liabilities, this is also part of the basic accounting equation. Okay, for the expanded accounting equation, okay, we can actually have equity equals to capital plus income minus expenses minus drawings. Okay, so the second one here, okay, is also known as the expanded accounting equation. And if you were to combine income and expenses in a form of taking the difference, okay, we would get profit. So profit is equals to income minus expense. So this option here is also correct. So in fact, the appropriate answer for this question is all of the above. All right, so with that, let's move on to the next question. What are receivables? Okay, it's very important that we understand the word receivable. Okay, this word receivable can be broken down into two parts. Okay, the first part is receive, which means the business will get something. Okay, maybe money or some form of benefit. Okay, and the word able is to indicate that it will come in the future. All right, so if you look at the options here, the only one that seems to resonate with the meaning of receivable will be potential benefit that the business will get from customers or from people who owe the business money, also known as debtors. Okay, and on the flip side, we have payables. So going through the same logic, payable means, or if you break it down, business will pay someone or some other party in the future. So a payable will be the owing of a business to suppliers or creditors. Okay, creditors are people whom the business owe money to. So it's like the opposite of the word debtors. Okay, for owings to the bank, we do not use the word payables. In fact, we have other accounts that are associated with this. Okay, so let's look at the word bank overdraft. Okay, the word overdraft comes from the word overdrawn, which means the business has overdrawn some extra money from the bank account. So this is an owing to the bank and it must be repaid to the bank in a short amount of time, normally within a few days to a few weeks. Okay, for longer term owings to the bank, we would term them as bank loans. Alright, so do take note of these common accounts that we have just learned. First one being receivables, second one payable, third bank overdraft, and fourth bank loan. Alright, I'll see you in the next video.